Hello real estate investors, Sam Hack here with Rent to Retirement, and today we're going to jump into one of Warren Buffett's favorite investing metrics, return on equity. I've had a few friends ask me about this metric recently, and I'm surprised it's not more well known and talked about. It's so important. The reason we want to know how to calculate and understand return on equity is because it factors in opportunity cost to our evaluation of an investment. In this case, an investment property. The formula for return on equity is return on equity equals annual cash flow divided by total equity. As an example, let's say you bought an investment property for $100,000 cash. You would have $100,000 in equity. Our net annual cash flow is $5,000, which is 5% of $100,000, so we get a return on equity of 5%. Then, in 5 years, the property appreciates in market value to $200,000. So we originally put in $100,000 cash, then another $100,000 we got in appreciation, so we now have $200,000 in equity. If we run a new return on equity calculation and assume our net annual cash flow is the same, we would take $5,000 and divide it by $200,000, our equity, which would give us a 2.5% return on equity. Then in 5 more years, the property does really well and becomes worth $300,000 in market value. We now have $300,000 in equity. Run the calculation again and we have $5,000 divided by $300,000, and our return on equity is then 1.7%. You can tell the more equity that accumulates in the property, the lower the return on equity becomes. We want to have a high return on equity because a low return on equity means there is dormant equity sitting in the property that could be used for investment elsewhere and making us more money. This is the essence of opportunity cost in economics. To do this, you can either sell the property to deploy that equity elsewhere, or you can do a cash out refinance to pull that equity out and put it to work in new investments while still keeping control of the property. If you want to learn more about other ways to evaluate real estate investments, check out this video right here. We'll go over return on investment and cash on cash return, among other metrics. As Warren Buffett says in the context of stocks, focus on return on equity, not earnings per share. Give this video a like if you found it useful and subscribe to our channel for tons more real estate investing content. Also, follow us on social media or me personally at Sam H Real Estate. If you want to start investing in real estate right now with a high return on equity, visit our website at renttoretirement.com or schedule a call with one of our investment counselors using the link in the description. Make sure to put that equity to work. Thanks for watching, and I'll see you next week. Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.